I want to call Diane. She is one of our presenters this evening. Diane, you're there? Okay, here she is. Here we go. So, Diane, do you have Anthony with you or just you this evening?
Just me. He had another meeting to go to.
Okay, wonderful. Okay, so tell us a little bit about yourself and Anthony, if you don't mind.
So I'm a CPA. Anthony's been in construction. We both had pretty successful careers, and we reached a point around 2017. We liked our jobs. We were working for people we really admired, and it kind of motivated us to think, what can we do to emulate these people we work for? I'd heard Dell on the radio, and I went to the 2-day, and that was it. It's been great ever since. And Anthony didn't go with me, my husband, but I came home and he listened to me and he got on board. We went to the 2-day again. And like David said, go to the 2-day more than once, which we did. I think we went 3 or 4 times.
Good. Absolutely.
Absorb everything.
Yes. Okay, so we are going to talk about this property. It's Cove Park.
Mm-hmm.
Okay.
Mm-hmm.
So tell us, how did you find out about this property?
I found about it through you, Hind. You've told me about another property. You told me to call Moon. I called Moon. That property was sold. But he said, how about a property in Kemah? And I was like, Kemah? I don't know.
Where's Kemah?
I looked at it. It was a little different, as you can see from the photos, because it's elevated. But we bought it, and it's been an amazing deal.
Okay, so Kemah is on the water. By
Clear Lake.
Towards NASA.
I heard that one.
Okay.
Okay.
Yes. That's why it's elevated. It's near the coast.
Okay.
Yes, yes.
Okay.
All right, so we'll go through some pictures before and after. This is one of the bathrooms. The other side of the bathroom.
That one has Cheerios in it.
That's it?
No. They take the Cheerios.
That's one. That looks good.
Yeah, doesn't look that bad.
Of our 7 houses, this was the easiest
Okay.
rehab.
Yes, yes. So if you were here last month, our presenter for last month had to deal with a hoarder house.
Yeah.
And before he got started here, he had 3 dumpsters full of junk,
Yeah.
a whole lot of there. So this is not bad at all.
We've done
looks
3
easy.
dumpsters too, so nothing compared to that.
Yes, yes, but this
3
house.
dumpsters is okay too, if that's what it takes.
Okay.
All right. So let's talk about the numbers. The purchase price was,
95,000.
oh, sorry.
86,000, sorry. Yes.
Yes, okay. The rehab was 23, and the price value is $230,000.
Yes. Yeah. So we were barely out of pocket.
Yes,
She came to my seminar and learned how to do it.
she did. Yes. So the rent is $1,800 a month, and the cash flow is $594, and the equity capture is $100,682.
You hear how Ian said that? This lady just turned 7,000, 100 grand. She's like,
Yes.
100,000. Dude, who agrees that's an awesome deal? One deal like that is life-changing. Give her a hand. That's huge.
These were not the numbers when we bought it.
Okay.
But I will tell you why these are not the numbers, because here it is. This property was sold just recently for $230,000.
Okay.
But
Went up in value?
Yes.
Okay.
How long did you have it for, Diane?
About almost 3 years.
Okay. So in 3 years, you put in the bank $7,000, then they give you a $100,000 return on that $7,000 you put in initially.
At closing, we walked away with that number, and that doesn't even include the money we made when we rented it.
The cash flow is what she's talking
Does
about.
that sound pretty good to you? What if you did 10 of those? Oh, wait, she did what, 7?
Yes.
So, I mean, guys, just look at her cash flow off of a couple properties. $40,000 a year tax-free. Who'd be okay with that? That's like a $60,000 or $70,000 job. Real people, real results. Give her a hand. That's huge. But not only that, Look at the equity she made on all those deals.
Yes, right. So we have 1, 2, 3, 4, 5. So these 5 houses that were sold, the equity was 160 to 100.
About 260.
About $260,000
Yep, and she still has another 200,000 equity still in the deal she has.
over a course of 3 years.
How long, if those of you who've been to my seminar, how long do I say we should hold houses before we sell them? 3 years. Isn't that great? Because 3 years, a year and a day is the minimum, or 3 years. Because why do we want to sell them in 3 years? After that, they become headaches. Things start breaking down. So if you sell them before they become a headache, and then you take all that money and you double it again. Does that sound hard?
Yeah.
Follow the map that Dell gives us, and you'll all be successful.
So in addition to the $260,000 that was realized in equity capture, Diane also had annual cash flow.
Yep.
So if you look at those numbers, that's times 3, that would be almost roughly $120,000.
Okay,
In addition to her 260.
awesome.
Okay. So Diane, how has lifestyle changed your life, or how has your life changed since you joined the Lifestyles?
Well, we were both employees, devoted, hardworking employees, and this opened our minds that we can make our own money and be wealthy just like our employers who we were making money for them and fulfilling their dreams, and now we are fulfilling our own dreams.
Are you seeing the retirement sooner now because of this extra 40 grand a year you were making?
Well, my husband is retired, and I retired, and I have gone back to work
Okay.
part-time because they begged me, but I don't have to work.
See, that's the power. You don't have to go back. It's because you want to go back.
Definitely.
I like that.
I like the people I work with.
Cool. I get that.
All right. Short-term goals.
Manage these last 2 single families for 1 or 2 more years and sell them and grab another couple $100,000.
Hmm.
And we are not even talking about what we've made with passive deals, but do more of those.
So you're moving from single family to multifamily, and that is the natural progression. Because in multifamily, you don't get the phone calls anymore. You don't do anything. You just put the money in. So that's what she wants to go to.
Yep.
That's great transition.
Don't worry about when your phone rings.
Exactly. It's awesome. Man, I'm proud of you. This is awesome.
Right.
Thank you.
Okay. So your team was the mentors at Lifestyles, Moon, Kim, like you mentioned earlier. The vendors that you used were from the Lifestyles vendor program.
Okay.
Okay.
So I have a couple new people in the room. So what advice, think back when you joined a couple years ago. They're coming to my seminar this weekend. It's the first time. They've never done this before. What advice would you give to the new folks?
Go to every road trip you can, go to every event you can. And Hind and I are basically best friends now. We met early on. Make a friend in Lifestyles because no one else will understand what you're doing.
Yep.
No
They
one
talk a
else
different
knows.
language. Yep.
It's a different language.
Awesome. So
So make Lifestyles as much a part of your life as you can while you're learning, and just meet people, talk to people, go to the expo.
cool. Yeah, that's next month.
And come to the 2-day for sure.
Absolutely come to 2 days.
Oh yeah, go to the 2 days many times as you
So
can.
Diane, I'm going to ask the crowd if they have any questions, or anybody online has any questions. David, if you have anybody online questions, let me know. You have some online. Let's take the online ones first.
Yeah, does she manage the properties herself?
Do you manage the properties yourself? Okay.
Yes.
Yep. Anything else, David?
Next.
That's the only one.
Okay. Anybody in the room have a question?
Wait, did you answer the question?
Yes, she
answer was
manages
yes.
the properties herself.
Okay.
I'm sure they heard this all.
And if you've never done this before, I break down in the seminar how to screen your residence, how to market it. I teach you all that stuff. Anybody in the room? Bueller? Bueller? All right. Oh, one there.
When she sold the property before, did she do that kind of around the same year, or how did that go when she was trying to get that into other deals?
Okay, so the
Okay.
question was, did she sell the properties in the same year? How'd she do that
How did you time your disposition of your assets?
when you sold those?
Well, last year was a hot market. So Hawkeye, the first one, the next door neighbors had always wanted to buy it as long as we owned it. So we ended up selling it to them.
They were nice neighbors. They gave you 60 grand.
Yep. And then several of them we just put on the market when houses were selling so well.
Okay.
They came up for rent and we were like, well, we might as well try to sell them. And then CoC Park, the last one we sold to the tenant.
There you go.
So we didn't have to do anything. He
Okay.
loved the house, lived there and bought it.
Yeah, and that's something I teach sometimes this summer is how to sell to your renter. A member in the room asked the question of, what did you do about taxes? Did you just pay them, or what was did you do 1031s or anything like
The
that?
taxes on the gain, right?
Yeah, on the capital gains.
Yes, the capital gains. So how did that work for you?
Well, we have so many passive loss carry forwards that we don't have to worry about the taxes right now.
Okay, so I want everybody to hear this. I know if you're new, you don't understand this.
Teach that.
I will show you when she's investing in all these apartment deals, they show us a loss. So even though she has gains here, it counteracts it, and she paid no taxes.
Yes.
That's where it's peeing your pants exciting. Who agrees? Yeah.
I'm sorry, say that
We
again?
haven't paid taxes on any of this yet.
Who likes that? Pay no taxes. God bless the IRS. You're all afraid of the IRS. We love the IRS.
Yes. Did you have another question? Sorry, yes.
Sure. Did she live on any of the cash flow, or did she plow it all into her?
So on your 42,000 cash flow, did you live off that and spend it, or did you save that for your next deals?
We invested it in our passive deals.
So they kept growing. Yep.
Yep.
Okay, cool.
And if you come to the expo, we're teaching a class about exactly what she's talking about.
Oh yeah, Hin's gonna be teaching a class on just that at the expo, so it's kind of cool. There you go. One last one. Go ahead.
How long did it take you to buy your first one, and how long were you in? Was it hard, like to jump to the
Great
first
question.
one?
Great question.
So if you go way back in time and watch the old case studies, I did one on Hawkeye, that first property. I was standing in Walmart looking at my phone and Moon sent a blast. Or no, another realtor, it actually wasn't Moon, but I replied and I bought it.
So what?
Maybe 2 months.
So about 2 months from when she joined.
And bought it after maybe a month or two.
Okay. So what you'll learn about this week is I'll talk about something called email blasts. Who likes the idea of all these realtors that are specialists, investment specialists, know all about the market, and they send emails of deals every single day that'll say, this one's 20 out of pocket, you make 20,000 equity, you make a 14% return. Who'd like that in their email? Come this week and I'll tell you how you can find out about those opportunities.
But in addition to the emails, that is something that she did, was she took action. She actually replied to the emails. She did the
Yeah.
education.
And she went to
talked to
Walmart.
the mentors. She went to Walmart. She checked her email, right?
Yep.
It's not 2 days later after the deal is gone and
Right.
sold that she's replying to the email. So the one thing that maybe Dave is going to touch on this weekend is the 80-20 rule,
There you go.
right? And she is part of the
I set an
20.
alarm on my phone, so I was alerted when I received an email because I was tired of missing the blasts.
All right.
Okay.
We'll take one last call, then we got to move on. I mean, one right there.
So when you look at the different deals, how many deals did you have to look at? So when you got that email, you thought, oh, this is a good
Okay, so really quick, I'm just going to synopsis what he said. He said, you see all these email blasts. How many deals did you look at before you decided Hawkeye was the one for you?
I think that was the maybe second or third.
Took her a lot of deciding. It's about taking action, not sitting on her laurels. She did that, so that's powerful.
But sometimes, in all fairness, you're
Yeah.
going to have to kiss a lot of frogs before you find
Yeah, you
something.
got to find the right one for you.
Yes.
Doesn't
yes.
matter what I would buy, doesn't matter what him buy, it's what are you going to buy? And
That's
that's
what
what we
works for you.
teach you. What is your criteria? What's in it for me? You got to be your numbers,
So
absolutely.
in her situation, she looked at the email blast and she looked at the numbers, and the deal worked for her, whether it's out of pocket or location or whatnot. And it will be the same for you. And there will be so many deals that will come through, and some of them may work for you, and some of them may not. Okay?
All right.
I didn't buy every deal that came. I mean, there were a lot of deals I just passed on for whatever reasons.
Yes.
Okay, cool.
Yes, exactly.
Well, thank you so much
you
for
so much,
sharing.
Diane.
We really appreciate it. Everybody give Hind a
Oh, yeah,
hand as well from the single family
Thank
side.
you.
All right.